This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China's seaborne imports of Russian oil are set to hit a record this month after refiners took advantage of cheap prices as domestic fuel demand rebounded, but Russia's plan to cut exports will likely cap buying in coming months. Hefty Chinese buying, alongside robust Indian demand, has been spurred by steep price discounts but is providing Moscow much-needed revenue after the Group of Seven imposed a $60 price cap on Russian crude. "Price is the king," said a purchasing manager for a Shandong-based refinery.
Crude oil processed by Indian refiners reached record levels in January, provisional government data showed on Wednesday, as the country boosted shipments of lucrative Russian barrels that Western countries shunned. Refinery throughput at 5.39 million barrels per day, 22.80 million tons, for January was the highest since Reuters records going back to 2009. Indian refiners are churning out refined products due to strong demand and undiscounted Russian feedstock, said Refinitiv analyst Ahsan ul-Haq, adding that refinery margins are strong as refiners are getting crude at lower prices and can sell them at higher rates due to a healthy demand.
Moving on to the top news in the energy sector.
Refiners' profit from making gasoline has tripled in Asia this year from October lows amid tight supplies from China and hopes of record Indonesian demand, a trend that is likely to continue into summer driving season, traders and analysts said. Rising margins also could drive up gasoline prices at the pump, adding to global inflationary risks. The refining margin on producing a barrel of gasoline from Brent crude in Singapore climbed to a premium of $12 a barrel in February, up from a discount of $4.66 on October 26. "We expect margins to stay strong till the summer peak in August," said Mukesh Sadhav, head of downstream at Rystad Energy said.
French power supply is set to rebound from low nuclear output in 2022, returning the country to the role of a net exporter, though a long maintenance schedule and current low hydropower availability are concerns heading into warmer months. French nuclear supply is expected to total 290 to 320 terawatt-hours, TWh, in 2023, which should reduce import needs enough to return the country to a net exporter of about 15 terawatt-hours to neighbors at the top end of estimates, analysts said. Last year saw nuclear supply in France drop to a 34-year low at 279 terawatt-hours due to a record number of outages at its fleet of reactors, run by power giant EDF.
Next, we have the top news in metal markets.
London copper prices fell on Thursday, weighed down by losses in stock markets, while traders awaited a key political meeting in top consumer China that is expected to unveil ambitious economic growth targets and stimulus measures. 3-month copper on the London Metal Exchange fell 0.6% to $9,044 a ton by 0807 GMT, while the most traded April copper contract on the Shanghai Futures Exchange closed up 0.2% at 69,780 yuan, $10,097.53 a ton. LME Aluminium rose 0.1% to $2,434.50 a ton, zinc edged down 0.1% to $3,110.50 a ton, lead fell 0.9% to $2,122 a ton, nickel declined 0.4% to $24,785 a ton and tin shed 1.3% to $25,000 a ton.
Aluminium futures on the Chicago Mercantile Exchange hit record average daily volumes in February, a four-fold jump compared to a year ago, and open interest also reached historic highs, the exchange operator said on Thursday. The average daily volume last month reached 3,161 contracts, 300% higher from a year earlier, the futures markets operator said in a statement. Each physically deliverable CME contract represents 25 metric tons, and by the calculation, about 79,025 metric tons of aluminium traded on the CME's futures market in February. We will now look at the top news in the agricultural sector. Indonesia, the world's biggest palm oil exporter, plans to require crude palm oil exports to go through a futures exchange in order to create the country's own benchmark price, the head of its commodity futures regulator said on Thursday. Authorities are developing a trading scheme for crude palm oil which aims to launch in June, said Didit Norditmoko, head of the regulator, Bapepti. Most Indonesian palm oil exporters currently conduct sales directly with buyers without going through an exchange, while auctions held by state trading company KPB Nusantara only offer physical palm oil and not futures contracts.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.